The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to take a look at the DAX and the FTSE like we always do. Rather quiet up here. They didn't have the explosive blow-off like we had here in the S&P here yesterday. Selling off a tiny bit today, not much to even write in the books about. But there's another market that really needs your attention, boys and girls, because it is right at the proverbial moment of truth. And let's get it up here. It's been very bearish for a long time. We want to bring this up here. I'll give you my 2 cents worth. And if you pay more than that, you've overpaid. Let's take a quick look here. You'll see this is the 4-hour chart in the Treasury bonds going back about 6 months. As you know, we said that we didn't think there was going to be any chance that we would see negative interest rates. So far, that has been the case. But if we get above the 140 level, in the I think it's 144 in the Treasury notes, that could certainly happen. But they don't look that good today either. As you can see here, we've had some larger ABCE patterns forming here down around the 164.16 level. We hit 163 and 28 yesterday, folks. That was quite a bit below the 164. We've back above 164 right now, but it appears that we could be making some type of a very, very important bottom. And let me give you why I think that could be the case. Remember, we have notes and bonds that we look at. Bonds are the more volatile of the group. Treasury notes are not as volatile, but they're 6 times the volume and open interest that we have in the Treasury bonds. So notes are much, much larger. It's the largest of all the commodity markets. So here's where we are this morning. We're going to get this up here to take a look at it for what it's worth. You'll see here we had a very important support there. You'll notice there at the 136 level, and you'll notice that big number there at 1.27 where the ABCD comes in. We hit that spot on today, folks. The low of the day so far in that Treasury notes was right on that low. So if we can hold that low, we've got a chance here for a little bit of a rally, folks. But this market's in big, deep trouble. This is a huge market, and it's got a lot of people that are long, and I think they're in big trouble. And if we go any lower than where we are now, we're going to be in meltdown mode, and that's going to cause a liquidity problem, and that is going to be something that you don't want to have anything to do with unless you're short the stock market and the bond market. But this is it. We're at the moment of truth today. There's no other way to say it from a technical standpoint, just by looking at those patterns that we've been following, that we're spot on at that level. So it's very, very important, to remember that. Now, yesterday we were talking about the gold market, why it was under so much pressure. I wanted to go over it today because we're getting close to something really big, possibly in the gold market. Here's the head and shoulders pattern that we had between February 8th and February 11th. We had the breakdown. We had the rally up to the right near the 50% level, and that was at 48%. And we made the ABCD down there at 1785 last night. Then we went sideways last night for about several hours, not getting any higher than 1794. And then the gold just started to collapse, which we've been waiting for this for quite some time. And whether this is going to be it or not, folks, I'm not sure. But all I do know is we've got a lot of patterns that are coming in here. And if you like patterns, this is one that you might want to keep an eye on. This is the gold 4-hour chart. You'll see here that we're looking at targets between 1710 and 1722. We're trading around 1777 right now. And that's what it looks like. Remember, on the left-hand side over there, back in November, right after Thanksgiving, we had a low there at 1767, and we're only $10 away from that. So that is going to be it should be a technical spot for people to pay attention to, but you don't really know. But the big ABCD on this one, you're going back from beginning of January down into middle of January and up into 1st of February, that big ABCD measures down to 1710. And remember, there is another one right below that on the weekly chart at 1650. So we could get somewhere between 1650 and 1710, and that is going to be a monster ABCD pattern on the weekly charts and in the daily chart, and you're not going to be able to find anybody well, there's always gold bugs around. Raise your hand, Larry. Yes, I'm always a gold bug. Thank God. Anyway, the main thing is that we got to watch it very, very closely. Now, one of the things that we focused on, if you'll follow me here, and we've done this all along here at the show here at TFNN, is the key to watching this particular market is to keep a very, very close eye on what is happening with the gold and silver miners. So let's sneak in and we'll take a little bit of picture here. And there we go. This is where we've been since August. You see we had a high of 46. The downtrend has been intact. That's a near perfect valid trend line, folks, because each of the points on the trend line is right at a Fibonacci point. And you'll notice here that the double ABCD patterns come in here at about 15% lower than, well, let's say 10% lower than where we are now. So if we get a move down here, and this market does not collapse very easily. So I don't think we're going to see a collapse in here, but let's just play the devil's advocate here and how long it might take, say maybe between now and, well, not now, but let's say in about 10 days, somewhere between the 10th and the 17th of March, if we get that market to line up in here and they get that gold down at that level, that's going to be a very big move, folks. Just stop and think now. With December in 2016, we had that monster 3 drive to a bottom pattern. That was a huge move for us, folks, for the 24/7. Folks, I had more compliments on that than I think had anything. Well, that last short was a good one too. But anyway, the thing you want to keep an eye on here is when we get to that point, we had a low on December the 16th of 1,030 an ounce. We went from 1,030 an ounce. We doubled in price. We went up to 2,070, I believe, was the high. So we went from 2,070, and now if our low comes in like what we think it's going to be, it's going to come in about $600 lower. Let's try that again, Larry. Do the math. $400 lower than the high we made. So that would bring us in right around 1,710 to 1,640 if it all lines up. And if it does, that's what we're going to, keep an eye on that very, very closely, because that's one that looks really interesting from a long-term perspective. Unfortunately, we've been on the short side of it. We issued a short sale the other day. That was on Sunday night at 1825, and that one's dropped, well over $50 an ounce, which is a really nice spot to look at. Oh, by the way, those of you that are interested in looking for a commodity broker, I have one that I've been using for a long time. If you want his name, all you have to do is drop me an email, larrypesavento@gmail.com. He's out of Chicago. He's been around forever. Straight up guy with a first-class firm. We'll be right back, folks. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're not currently using the Taz Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The Taz Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, I don't know what's happening in Texas, but the crude oil's just dropped $2 a barrel, almost $2 a barrel here in the last 45 minutes. So there's something must be going on with the weather. Maybe the weatherman says it's warming up down there, but we broke from 61.25 and we got all the way down to 59.50 so far, and that is $1.80. So that's not a small amount, and it came down very, very fast because it's usually news related when you see something like that, because as you can see here, you had a perfect ABCD pattern there at 61.25, and risk there would have been relatively small, and here what you're looking at here is a pretty move down. Now, one thing you want to look at if you're doing this, let's just play the devil's advocate, because this is one of the things that I really like. The key price that you want to look at now is that old low at 60.10. Remember we talked about that yesterday? That's still going to be a key price today. So watch 60.10 in that crude oil. If we don't get above 60.10 in the next hour or two, that's going to be a good shorting opportunity, because if you sell at 60.10, your risk there is only going to be about 40 pips, and you're trading something that's worth $60,000, and you're only putting up $400 risk. Boys and girls, you're not going to get that kind of action any bank that I know of. So pay close attention to that one. Very, very interesting to look at it. Regarding the gold here today, I believe, we're down quite a bit. We're trading at 1777. I believe we're about due for a rally. I mean, because we are so severely oversold. But I still think the longer-term projection on the gold sets up somewhere between 1710 and 1650, and I'd like to see that happen in about a week. And if that does, we're going to have our buying shoes on and load up the old vault and buy an ounce and see what happens. So that's what we'll be watching for sure. Okay, someone asked me a question about Cougarans. Cougarans are the gold coin of South Africa. It's got the picture of John Cougar on it. Well, we won't go into that. But anyway, he is the fellow who got South Africa on the map, I guess, many years ago, in the 1900s, whatever it was. But his picture is on that. And they were the most popular coin for a very long time when gold was hot during the times of the early 70s when I was at Drexel. We sold more Cougar rands than anything else. We sold Austrian what was that? The Austrian pieces. Can't remember the name of it. The Mexican peso was really popular in Southern California because it was 1 in 20 ounce, and it was beautifully sculptured coin. I still have a couple of those there. They were 1.2 ounces. The good thing about those coins, folks, is they were bullion coins. They basically were like little ingots, is what they were. And then later on, this was about 10 years later when it was on its way down, they started bringing counterfeits out. And the counterfeits were popular for a while, and then they found out a way that you could assay really quickly and not worry about whether it was counterfeit or not. But Cougar rands were very popular, and I still have my Cougar rands, but both of them. Anyway, let's move on here to take a look at a couple other things that really need to get our attention here. We had one market that we were very, very positive on for a very, very long time. I mentioned to you this was from our good friend over in the Far East, and he was a very happy camper. He's been incredibly bullish on platinum since we made the 382 down there in September. And that ABCD structure measured to 1280, and I said we're going probably close to 1300. The 1.618 expansion, folks, look at this. If you don't believe in Fibonacci, just take a look at this one. Look at the high in January and the low in March. And if you multiply that times 1.618, that takes you to 1341. The high in the platinum was 1348, and we're trading $100 lower already. Now, this could still be a much, much bigger bull move going on, folks. Look at Bitcoin today, folks. I think we hit 52,000 or something in Bitcoin. And then we have our good friend Muriel Nobrino, was that his name? The guy from NYU said it was absolutely sure that this was a bubble. That was a tulip bubble is what he called it. And I'm sure he has his opinion, and it's like everybody else. Everybody has an armpit, and it usually smells, so be careful. 54,000 is your short-term target in BTC. Okay, well, let's see how that hits there. We'll go from there. Anyway, those are the things that we're looking at here this morning that I think take pretty good importance. Now, let's take a look here at the natural gas, because it was actually telegraphing that we might have a little break in the energy this morning, because we did get up to the 78% level yesterday at 319. We're now trading around 303, I believe. But that's not as much as, well, that's about the same amount as what the crude oil just dropped. Now, I don't know what caused the crude oil drop, folks. All I saw was it dropped. It made an ABCD there. I happened to be watching that, and that's exactly what it did. So you just got to do one at a time and see which one is going to come up. I think the big one today is to watch those bonds, because those bonds and notes are on the proverbial edge. It's covered with WD-40, and if they slip from there, look out, because that means that the boys in Washington are going to have a hard time selling these bonds and notes. And look at the dollar. Look at the dollar, what it's doing. You know, we've had a tremendous move in the dollar, just absolutely straight up after we hit that 61% level. I mean, it was just a monster move to the upside. So those are some of the ones that we're keeping an eye on today, and that's where the players are right now. We got the stocks are down just a little bit today. This is only the first day down. And whether this is going to be much or not, we'll have to wait and see if it's going to be anything or not. You know, we really don't know. I've had a request here to take a look at the most active traded stock in the world, and I think the most widely held, which is Mr. Appel. We'll get it up here. You'll notice here that we made a high up there at 144. We broke down to the 78% retracement at 131. We rallied up to the 50% retracement at 138. And now it looks like we're coming into minor support at 131. That's just the ABCD over the last few days. But the big support, folks, is down there at 124. That's an ABCD pattern. And with the weakness we're having today, we're probably going to see, you know, the challenge here in the Apple at the 131 area. And below that, you're looking at that 124, and that's another ABCD. That's That's really what we're paying attention to. So I hope that makes sense, because these are just simple patterns. I know I do this every day, and I know you folks probably get bored stiff looking at some of these things, but that's all they do. They go up and down and sideways in the ABCD format. That's all they're doing. I don't know if any of you guys listened to the Elliott Wave webinar they did last night, the 1-hour webinar that lasted 15 minutes. I was shocked. The guy put up a pattern showing an Elliott Wave. It was a perfect Gartley pattern. He had a couple little tiny things in there, but he gave just a beautiful Gartley pattern, and then said this was a expanded wave or whatever. I forget what he called it, but it ended in 17 minutes, and it was supposed to be for an hour. And I don't know. I don't know what I thought. Maybe they knocked me out, but maybe not. So we'll see. We'll be able to look and see. Okay, all right. Now, there's a lot, folks, there's a lot of opinions on the cryptocurrencies and the blockchain. So if you got an opinion, that's it. It doesn't mean anything. Let's see what's happened. 877-927-6648.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I just was informed that the Apple had just made the price here You'll be able to see here we just hit that 131 level. So it's going to be very, very important whether we hold this 131 level because if we don't, we're heading down to 124. So that distance is $8. So we have to figure out what to do with that in the next half hour or so. Okay, if you trade Apple, I just bring it to your attention. That's all. Okay, now I want to bring David White David just posted something really cool. It's a quote from Jim Grant, the interest rate guy. It says, "Why it is important to buy gold is even more important to sell it." Folks, I can remember back in the days of Drexel Burnham when gold was going from the time I was there, 76 through 82, it was going straight up. And the banks, the last 2 years between 79 and 80, began they had a little window there where you could go and buy Cougar ants and Austrian kroners. That's what they were. And you could buy those, and you could also buy Canadian maple leafs. So you could go into the bank, and they would have this little window there above it. It said, buying gold. There was no sell gold window. There was just a buying gold window. They never sold any. All they did was ever buy it. And people that bought it then had to wait 20 years. 20 years, folks. It topped in January the 20th of 1980, and it didn't bottom until 2003 when King Thomas O'Brien, the first, said this is the bottom in the gold market. I remember it very vividly because I was listening to the Den occasionally. I didn't become a member of the Den and start doing this stuff till 2007, but I was watching what he was doing. He was the gold king at the time, and I think it was 250, 260 is where it was going. I remember because my grandson was just a little baby, and so instead of buying stock for him, I'd buy him toss in a little gold coin once in a while, and so that turned out to be a really good one. Thank you, Tommy, on that one. But that's really what happened to that market. It went straight up, and it went down for 20 years. Now, whether these markets act like this anymore or not, I don't know, but someday they will. We'll have to wait and see. That's the main thing to keep an eye on. I wanted to show you this dollar index, folks, because this was a key yesterday. We mentioned this to you, and this was very, very important. You can see we hit that absolute spot on 61% retracement there at 90.10, and we are off to the races. This thing has really exploded to the upside, and it looks like an ABCD structure here could take it to 92.10. This would take the euro down, to the one. Hold on, folks, to the 118 level if it does. But this is a key day for the euro, as it is in the Treasury bonds and Treasury notes, because it has to hold this level of 120.40, I believe is what it was just a little while ago. Yeah, 120.38. It needs to hold that level, and then it will have some type of time to give it a little boost, and we'll be seeing what it'll do from that level. So let's keep in mind that these markets go up and these markets go down, and they don't always do them at the same time. But keep your losses as small as you possibly can, but don't make them too small. We've just broken. We almost hit 3,900 here, folks, in the E-mini S&P. We haven't seen that level for a very long time. So we want to watch it and make sure that. I don't know if someone's asked me, I've had 3 questions this morning about the top. Hell, I have no idea whether the top is in. I posted this from our friend across the pond. It's a really nice symmetrical chart showing that there could be a top between 39.20 and 39.40. Whether that's right or not, I don't know. But remember, this thing goes back quite a ways. It goes back 32 years. So let's remind ourselves. You can see the beautiful harmony in here, how it hits these numbers. I mean, my goodness, there's got to be something there that makes these things looking out. Yes, the grains are down today, Bob, because they had that big run yesterday in the grains, and that's usually due to the cold weather. We were hoping to have Rich Anderson on tonight, but we certainly didn't want to. He was just very, very busy, as you can imagine, with these markets jumping around like that. Rich is a big options player, so he uses the option markets like a surgical precision, like you couldn't possibly. He's just very, very good at it, and he owes a lot to that to our good friend Mr. Mark Douglas, because whenever he would come out here to visit us, and when Mark and I were living right down the street from one another, Rich came out several times, usually once every 2 or 3 months, and well, more than that. And Mark would give him a little lecture about sell an option and buy a Mercedes. In other words, be an option seller, folks, because that's where the money is. You're selling volatility, and that usually is a pretty good thing to do as you watch through some of these things. Give me a moment here, folks, to check up to see where the markets are right now, because I want to be able to see if we didn't quite break 3,900 in the S&P. We got to 3,901. We know that's an important number just because of the mathematical nature of 3,900 being an even number. But the key number to watch today, folks, from my perspective on a short-term trading, is to keep an eye on 60.15 in the crude oil. That's got a really key number. Just like we talked about it yesterday, that number was there. And it's there again today. So that really means something. And it's nothing more than a repetition of what's happening in the market. It's related to the numbers of sacred science, of which the Fibonacci summation sequence is one of those. But watch that number, 60.15, because if we don't get any higher than that, this cold snap might be over in the old Pueblo of Dallas and Fort Worth and those other places. So it will end. It's just a question of when the thing is going to and then we'll look at it one way or another. Okay, now let's move on to someone asked about the grain markets. They had a big move up yesterday. We've got the corn trading at 547 today. The high yesterday was 553. Wheat was up 15 cents. Corn was up about 13 cents. Beans were up 17 cents, all related to the cold weather because animals need more protein and more feed when it's cold, and that's what causes it to go up, and that means the prices are going to go higher. Someone's asked me a question, is anything magical about 3,900 in the S&P 500? The only thing that's magical about it is it's a 1.618 expansion of the overnight range at 3,900. That's it. It should hold that level, 3,900. And if it doesn't, look out, because, we've been in a heck of a run of these things, and they could really go to the downside. We're 39.01, 30, there, we just hit it, 30.89. Let's see what happens now. That's it. So now we're starting to go a little lower. That's a bad sign in Denmark, boys and girls. Be careful. Okay, let's move on to one other question that someone had, and that was about hold on just a second. I'll get the chart up so we can see it very easily. And that is about the copper market. And I'll get this up here so we can see it here. The copper market has been in this really big bull market. You'll notice we had the big gap up. We had the ABCD, and we went up to that 380 level. I think we went a little bit higher than the 380 level, but that could be an area where we're going to be able to take a look at some of these things to see if they're going to work in the right, proper perspective. So we'll take a little break here. 877, big announcement, folks. Huge announcement when we come back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and I think we have Mr. Z from Philly on the line. John, how are you?
Oh, we're looking forward to you and Sarah coming back to Philadelphia sometime.
We don't even know if it's still there or not. We see the boys on Zoom every day, but it's been a sad situation. 14 months without seeing the grandkids is that's more painful than any virus you can have. What can I do for you, my friend?
Absolutely right. Thank you for reviewing T-bonds, T-notes, COMEX Gold, and the GDX. I'll just state, and I know this is true amongst many of your listeners, you're setting things up. Looking at that bigger picture, I find very helpful. It's a great way to start the day, so thank you on that. Wanted to ask you on the S&P futures. We made that peak at 39.59 on Tuesday. It was like 11 p.m. Monday night, actually. I'm wondering if you can share with us what levels, if broken, what levels, that are underpriced right now, what levels, if broken, signal to you that you've got something going as far as the decline is concerned, as compared to just mucking around, small corrections lower?
Sure, 3,900. The low today was 38.98, and I believe if we go below that, that is going to trigger more selling, and that might be a significant top, tradable top. I don't know if it's going to be the top or not. I don't really care about that because, I'm more interested in how much I have to risk as opposed to how much I'm going to try to gain. But the key level today is 38.98. We hit that and immediately jumped 12 points, as you can see here. So that is a key number. Going below that would really, get it to moving. John, we're in such a different environment right now, just like we were in 2000. I remember it vividly with the .com stuff, but we've got, Reddit, and we've got Twitter, and we've got all these other people that are out here using, social media to promote their wares and stuff. And that's just like the shoeshine boys in the 20s, as near as I can tell, because, we didn't have computers, nobody had a telephone back then. Well, a few people did, but this is what I think is happening. But, I'm wrong a lot and never in doubt, as I always say. But the key level for me is at 38.98. If we get below that, that's going to tell us that, yes, we are getting ready to probably have a significant correction. How much it should be? The minimum would be a 382 retracement of the low from 36.50. that would take you down to just about 38.25. So it's not big correction, but if we start breaking those levels, John, then there's going to be then you have to look at something a little differently. This is a big pattern, as I posted several times here over the past few days. I thought the top was going to be 39.24. Looked really good for a couple of days, and then it didn't. And so now, look, we're 20 some points below it. But we'll see what happens here at 38.98. That's the line in the sand from my perspective.
Excellent, and I see what you're referring to on that 38.20, 382 level. So that's food for thought. I appreciate you sharing. Answers my question. So thanks again, and.
Well, you're not going to get off.
You're hearing from Rich Anderson on the upcoming planting season. So thanks again.
Hey, you're not going to get off this easy, Bubba. I want to know what you think about the beans. Are we going to hit $14 a bushel?
No. In a word,
okay, good.
No.
Thank you for joining us.
Here's why. Let's see. It was it was Tuesday was the USDA report. And right ahead of the report, the March beans, the spot beans, got up to 14.09. And then there was big liquidation the following day, the Wednesday. That would be the 10th, which carried through into Wednesday evening's ECBOT trade, where we made on that March beans the 13.37. Now, what I found fascinating, the reason I bought it that Wednesday night, was that 13.37 low in the first 30 minutes exactly matched a prior swing, maybe a week before at 13.36. Anyway, so it bottomed at a spot, that was obvious. I mean, you never knew in advance that was going to occur, but it was a place to take a shot. And, of course, it rallied Wednesday. Rallied Thursday, went sideways Friday, and then gapped up Monday nights after the holiday was done. And that gap up high on those March beans was 13.94. And Larry, I had my charts open. I was in front of the screens with my orders ready at 8 p.m. Monday nights. And that 13.94 was the exact Fib 786 mark. I just, it always amazes me when you've got a calculation and a market goes to it and turns. So that was the obvious spot to book a gain. We're not far underneath it. So all I'm thinking is, prove it to me if you're bullish. You got to get over 13.94, both a swing high now and the Fib 786. And you get over that, then sure, we'll get to 1,400 or higher. But, I won't bet on that, and I'll say, no, it's not going to get there until we get over 13.94. Real easy.
It's fair enough to me, my friend. Well, listen, be safe, and I hope you stay warm. What's your high today going to be, about -6?
Yeah, +6. We're digging our way out of the hole.
Okay, well, listen, take it easy, my friend, and enjoy talking to you all the time. Stay safe.
Thanks, Larry.
You bet. Mr. Z from the Den, TFNN, folks, always a great place to get good information. They got some heavily armed traders in there that really know what they're doing, so it's a good thing to pay close attention to. Okay, now as we look at the markets this morning, we got gold down quite a bit. Crude oil's broken quite a bit. We've broken $1.80 a barrel. The key level to look at today is 60.15. We're trading at 60 even right now per dollar per barrel, so that's another one to pay very, very close attention to, because it's a spot where there should be a line in the sand, and that's it in the crude oils. Yesterday was 60.15, and today is 60.15, so that really does mean something from a mathematical point of view. Has nothing to do with the fundamentals, has to do with the mathematics of the market. So just remind that. We're trading at 39.13 in the S&P. We had a low of 38.97. And if we get below 38.97, that's going to be a game changer. But we'll be pay close attention to that for sure. It's going to be real interesting in these markets because we're going to see volatility, folks, like we've never seen before. It's really going to be intense, and we really want to be able to take advantage of it. And we've been very fortunate here on our 24/7 this past year, and started out really good. So we want to be there. We're almost there now in the crude oil, 38.13. Excuse me, 60.13. So the number is 60.15, and we'll see if it gets there, and it certainly should. It's only 2 ticks away. But the reason, if that's wrong, it'll go above that 60.50 level. So the risk there it is, 60.13. Now, if we get above the 60.53, you're out with a $400 loss and have someone to blame it on. 877-927-6648.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're getting a nice rally off of the 38.96 level, which is always nice to see after a big down move. We had a high of 39.59 overnight, so we want to pay close attention to these numbers because that 39.59, we get above that, you'll be you'll be looking at something really, really dramatic, even more dramatic than what we're seeing over this last few days, which is frankly not very much at all. So we'll watch that one very closely. Now, we went above that number in the crude oil by a few pips here. So pay close attention to it, folks. We're very, very near what we think is something quite important in this crude oil market, because when that weather does break, the market will get down and get to normal areas or wherever that level happens to be. It's been a very good market for us, folks, so we certainly don't want to lose fact of that. We became very bullish on the day in April when we went negative. We said we're going to see at least a $20, $30 barrel rally, and we certainly received a lot more than that. So the main one to keep informed for this next few weeks, folks, is that gold market, because that's been a really good one. We want to watch that one very closely, as we must be watching the stock market here too, because these are all times where the old Chinese curse, may you live in interesting times. Well, we are in those times. Volatility is going to be absolutely immense. So keep that in mind as you're watching some of these things here today. It's a very, very important fact of the market, and it doesn't always work that way, but we'll keep an eye on it as we look through here. Okay, we got the Dow down. Oh, Dow's down virtually nothing. Holy cow, down a point. S&P's down 9, and the NASDAQ is down about 80. That's been the leading one, but that doesn't always work that way. Okay, let's move on here to one other market that someone's asked me about, and that was the British pound. Folks, we're waiting for that number in British pound to come in. We came within 50 pips of it at that 140 level. We're about 200 pips under that right now, and we're still going to wait for it. I think we got another day or two where we could go up and touch that 140 level in the British pound. So live every day in an attitude of gratitude, and may God bless.